All right, guys, what is up? Welcome back to episode 12 of the Kingdom Podcast. Here we have quite a stats crew. It is not just me and Ryan like it was last week, even though we held it down pretty nicely, I must say so myself. So we've got in the chat here, we have Ryan, we have Trying to Make It, and we have New Fish Big Pond. Again, a lot of regulars here, which is absolutely awesome. Royalty Trades may be joining in a little bit later on, but we're going to hold down the Kingdom Podcast for him as we continue to go through. We have a lot of things to cover, from IPOs to economic data to charting stocks to who knows what else could be brought up in this conversation here. But to get things started off here, Ryan, since we hosted last week, how you doing on this fine Sunday?
Doing well, yeah. Happy to have Fish and Trina here with us, even though, yeah, like you said, we held it down, but happy to be here.
Absolutely, man. Fish, man, it's good to have you back here. I think you're on vacation, I believe, is what I heard the rumor was on the street. So how you doing?
Dude, let me tell you something. I was on vacation, and I picked the wrong week to go on vacation, bro. Wow. Yeah, everybody was making money except for me. I mean, I took a couple of like small trades in the morning, and then checked them a little bit later. Luckily, there were some of those crypto things that were popping, so they were pretty profitable. But I mean, I didn't get in on Oracle, that's for sure.
Yeah.
Oh, dude, the Oracle thing was crazy. We could definitely talk about that. We'll go into we got a lot of things to talk about, because let me tell you, when I went on Wall Street Bets, oh my God, people were printing cash left, right, and center, and I could not believe my eyes. So we'll definitely be breaking down more of those. But Fish, it's always a pleasure to have you here. We're glad to have you back here off of vacation. Now you can get back to the grind. Trying to Make It is also here as well. Trying to Make It, how you doing, man? Welcome on.
What's up? What's going on? How you doing? How's everybody doing? Doing great, man. Thank you very much, man. Relaxing, man. Enjoying the weekend. Crazy ass week that we just had to survive. A lot of traders, we had to wait for that data that we had Wednesday, Thursday. Once that data came in, a lot of volatility swept into the market, and now we have a week ahead. FOMC, a lot we have to talk about today, but yeah, man, doing great. Thank you, man.
Yeah, dude, absolutely. And again, we're glad to have both you guys here. Again, Ryan and I were going over some trading strategies last week here, and it's good that we get a little bit of a break when we can have some conversations here, because we've been talking a lot. And we also had trivia yesterday, which was very, very fun as well. So since Trying to Make It brought up the idea of economic data here, why not jump into what happened last week with economic data? So Trying to Make It, starting off with you, what economic data did you see that kind of like created this volatility in the market here?
So I'm gonna be honest with you. We had PPI and CPI, right? And then we had I think Michigan consumer again as well. Let me see if I could put all of this up here. But it didn't come out as good as well. Obviously, it didn't come out good. The data's not well. We have a lot of issues in those situations. But every single data that does come out, seems like the market reacts positively, because it just pushes us more and more on that ledge of falling into rate cuts, right? The big situation is, 25, 50 point. That's the if for right now. We're 100% probably going to fall into rate cuts with all the data that we've been seeing. But yeah, we're just honestly stacking that ledge, man. Eventually, we're going to have to see some sort of follow through with that. We might be pricing in all of this as well. Who knows, But what do you think about specifically with the information that came out? I'm looking at the numbers, and they don't look too well, Ferg.
I don't know, man. I mean, me and Ryan were talking about this a little bit last week, Ryan, I believe. And I was talking about PPI, and I was thinking that PPI was actually coming hotter than expected, because CPI came in pretty hot. So I was thinking that PPI for this month was going to come in pretty hot as well. But, PPI coming in down 0.1% month over month, year over year, 2.8, which is down from 3.5. So the producers aren't really taking on a lot of those costs, it looks like, which is really good to see, actually. But then we get CPI data that hits us, and we get an uptick in CPI. It came in at expectations year over year, 2.9%, as it was expected to in this case, I believe. But the problem with the CPI is that previous month was 2.7. From 2% to month over month went from 0.2% to a 0.4%. Expectations were 0.3. So CPI data came in a little bit hotter than expected here. And also initial jobless claims that people tend to forget sometimes. Jobless claims is ticking up higher and higher, closer to that 300,000 mark. I believe what people usually say is when it hits the 300,000 for initial jobless claims, that's where like stuff really starts to hit the fan. So we went from a prediction of 235,000 initial jobless claims. Now we went up to 263. So it was a huge miss on the jobless front, which I think maybe the market saw that and was like, jobs data is still becoming absolutely atrocious. rate cuts have to come in to try to, cancel it out, balance it out, try to revive the market, those kind of things. And then the Michigan consumer, like we talk about, we had expectations expected to be 54.9, came in at 51.8. Consumer expectations are not good; they are worse. And then consumer sentiment came in at 58, or wanted to be 58.2, came in at 55.4. And the current market conditions are still pretty low, for people who are thinking of the markets in this case here. Also, a kind of shocking one, the Michigan 5-year expectation for inflation estimates was 3.4%, and it came in at 3.9. So people are expecting higher inflation over the 5-year period, which again is a very, not good sign. But I think that, like you were saying, I think the market's just kind of taking data and saying it just tees it up for a rate cut coming this week, coming up here, and that's what everybody's loving. But I'd love to hear obviously you guys' thoughts on this. Fish, do you have any kind of insights on any of the economic data, things you saw, things you're reading, anything that comes to mind?
So I'll be really honest. I detached from the market last week completely, man. I didn't pay attention to any news. I was sort of unable to really. I was on a cruise ship with really terrible internet. So that didn't work out real well, and I blame it on being on the Bermuda Triangle. But hey, well, whatever it is. But no, I wish that I had something to contribute on that end, man. But I really don't this week.
It's all good, man. Don't worry about it at all, dude. I always like to just hear your thoughts on things. Ryan, I know that you've been, we've been talking a lot the last week or so here. Ryan, did you see anything in the markets with the data that, was, it seems like we're kind of set up we're teeing up for a rate cut 100% guaranteed. I hate to say that as someone who does math for a living. It's never 100% guaranteed here, but I don't know. What are your thoughts on interest rate cuts, data, anything of that nature?
Yeah, I mean, I think likely to see a rate cut. We'll see though, and yeah, I don't know. I thought for sure we'd see a little bit of a dump last week, excuse me, from the CPI, PPI. Almost, in fact, put on a bearish trade in SPX just for the week. Glad I didn't.
Yeah,
would have been a small little thing, but yeah, I don't know. I mean, the only thing I have to say is you said what about this volatility? And my answer is what volatility? My question is what volatility? Because there is none. But other than Oracle over here.
right.
But yeah, that's about it for me.
I
don't have anything else. But go ahead.
Yeah, honestly, I was actually shocked to see, I was thinking that we would get, these worst numbers that come in, and I would think that the market was going to hit it negatively, but I think it just lined up the stars to say we're getting a rate cut this week coming up, and that's kind of what I think the market's pricing at this point here. So definitely not a really good start. Jackson, Atai says in the chat that 7-year car loans just surpassed 5-year loans, which is a very bad sign as well. Definitely very, very important to know. Also, I think a lot of credit card defaults or delinquencies or something like that, or those kind of things, the credit card data is also not that good either, where people are either barely making their minimum monthly payments maybe, or maybe they're defaulting, or they're getting, closed out, or whatever the case is. We're not looking too hot as an economy overall, but the market is still hitting all-time highs, which to me is absolutely wild. Because this is showing down a huge idea of a slowing down economy. And people always think that they're bullish for rate cuts. It's like, guys, rate cuts aren't bullish. They never have been. They've always been like, our economy is struggling. This is our lifeline here that we have. And they're pulling on the lifeline to hope for the best. I'll give you another example here that's really interesting. Because initial jobless claims, we don't know how soon that is. Maybe it's like a week that they've been unemployed or whatever the case is. But even taking a look at they had more data also on jobless data this last week. The 4-week average of jobless claims was 240,000 jobs. And September 4th, so last time it came out, was 231. Before that was 228, 226, 221. So we're getting this continuing uptrend of the average 4-week jobless claims data as well. So it's not like people are able to find a job quick, but when they're unemployed, they're staying unemployed for at least 4 weeks, and that's not a good thing, right? Because AI is taking over in terms of filling in those jobs of of secretaries, of cold calling, of service providers, whatever the case is, right? So it's not good, So it's very, very interesting to see that the market's doing so well. I mean, all-time highs to me, I don't know about you guys, but all-time highs for me is scary in this kind of economy.
I agree with that. I've been agreeing with that for quite some time. I've been saying that we need to have a correction for months now. And just to go back on your point about that you were making about the auto loans and the credit card payments and stuff like that. Auto repossessions are increasing month over month over month. People are going, more and more people are going 45 days late on their car payments. What's the next thing after car payments? It's your home. So,
Right.
start expecting to see that coming if the economy continues the way that it is. Not the market, but the economy. Because the
Right.
market
And I think it's one of those things also where, like, I think someone posted it probably on After Hours, but also something that everybody usually goes with is this idea of saying, I forgot what you guys might know the words better than I am, but basically, like, you have to be are you as patient as the market is rational, or something like that. I don't know if you guys know what I'm talking about, where it's just like there's a phrase to it where it's like, can you stay in the market and be as patient as the market can be rational, or whatever. I don't know if you guys know what I'm talking about here. Anybody want to chime in on the wording for that one? But
it's something. It's like the market can stay irrational longer than you can stay solvent.
Yes,
Something like that.
yes, exactly. That's the one, and I think that's kind of where we're at now, where it's just like this is irrational behavior from the markets, because we're pushing these all-time highs. Jobs data is awful, inflation's spiking up or starting to have this huge uptick as well, and now we're talking about rate cuts, stuff like that, and people are like, oh my god, like this is amazing, we're at all-time highs. I can't fathom if you told me that jobs data is awful and inflation's ticking up, and you said, Fridge, by the way, we're at all-time highs. I would be shocked. I would be like, what are you talking about? What kind of crack are you smoking here? Because that's not a thing. But that's the market we're living in right now. And I think I don't know if someone posted about it, or maybe I read it online, but I think we're back in the greed for the CNN index, I believe. Let me see. I can pull it up for you guys here. Let me see. I believe we're in the greed territory right now, which is not a good thing.
If I'm not mistaken, I got 54 neutral, but I think that's because that's from last week. I think previous close was neutral. Yeah.
Yeah, we were neutral.
Yeah.
Is what I was saying, which is wild.
But we're like we're on the very high end of neutral, so we're about to take over the greed potentially, depending on what happens. But maybe we came up and then we ticked back down. Maybe I have no idea.
Yeah.
But
I mean,
but like we're out, we are very close to that greed territory again, which is obviously like not a good thing as well. So I don't know how are you guys thinking about managing this market right now? Like, what is your thoughts? Anybody have any ideas? Whoever wants to take over and start off, what are some things that we could do to prepare for this kind of market?
Well, I mean, like for me, I mean, I don't know. I don't really know how to do it, but I admire what Ryan does. And I'm not trying to make fun of it because I don't know the term, but I think you have stuff called like a jade lizard and stuff like that. Like, dude, those things are like incredible. The way that you make money doing that, you can play both sides and you'll be fine, or diagonal spreads or whatever you do. I admire it, man. I need to pay attention.
well,
I'm just scared to, No,
okay.
seriously, bro. I'm just scared to. Honestly, I really am. But until then, what I'm gonna start doing, man, I'm just gonna start cutting losers and just going with the momentum. That's what I did before I thought I was smarter than the market, and it's time to get back to what I know.
Love that. So let me ask this, Fish, before we go on other people, what their thoughts are on the markets, what they're doing here. Where do you think the momentum is right now? Do you think it's like a certain sector? Do you think it's only certain stocks you're looking at here? I know we talked about that a little bit before we went live here, but do you think it's a certain sector that's going to do really well in this kind of, momentum thing here? Or do you think it's going to be like individual stocks that like you're going to focus on just stocks that you think have momentum here? What is your kind of thought behind that?
So sort of straddle the fence on that question. Sorry about that. I've got two different ideas for this question. One is I believe that the NASDAQ and the S&P and the Dow, I believe those are already priced in. But I've been talking with some people, and the couple of people that I've been speaking with agree that we all think that the Russell 2000 has not been priced in yet. So that really may be, in my opinion, the place to make some money right now before rate cuts. you might be able to get in at a good chance. And then, on the other side of the fence, like I was talking to you guys before we started recording, I'm going to exit my MISTY position, my MSTY position. I've been planning to do it, looking for an exit. Haven't found one, so I'm just going to bite the bullet and accept a small loss on it after, the difference between my loss and my dividends that I've received. It just didn't work out the way that I had hoped it did. But I'm going to take that money. I'm going to put some of it into ONDS, and I'm going to take the rest of it, and I'm going to put it into ATYR, pharmaceutical company. It's got a drug. It's called EFZO-FIT. It's a pulmonary sarcoidosis drug. It's in phase 3 clinical trials right now. It's a 12-month program. You get an IV once a month, and it basically makes it much easier and gives people a better quality of life while they have this, and it can help clear them of this disease as well. As far as what I've been reading about it, but if the trials are supposed to be released sometime mid-September, and so I'm thinking it's going to be this week. If the stock does well, I mean, it's got a 100% buy rating on it. If the stock does well, we're seeing price targets of 20, 25, all the way up to 35, 40. And if the stock busts, expect it to go to $1. So, it'll go to $1 overnight. So it is an absolute risk. But being at phase 3, this will be the first drug of its kind to do what it does. It looks like it's got a pretty strong chance of going. So I'm going to go into it. My other thought on this is if it doesn't pass, they'll then know why it doesn't pass. It can just be a hold.
Yeah, man. I mean, that's the good thing about buying shares versus buying options, right? Because when you're buying options, obviously you have a limited time to actually have it play out for you. But if you're out there buying, shares, you'll be able to hold it for a long term for sure, right? So that's kind of like a nice thing to do is that if you're buying shares, you can hold it, wait for it to do what you want it to do, hopefully, and not worry about exercising worthless or whatever the case is with options, right? So it's very, very nice to actually do it that way too, for sure.
Yeah, man. That's exactly the reason why I'm doing it this way. Also, if you look at the options chain for September, the implied volatility shot up to like 1,000% on some calls. Yeah.
So maybe it wouldn't be bad to sell some cash secured puts maybe on if you want to lower your dollar cost average, right? Maybe sell cash secured put like $1 strike maybe or whatever the case is. Would it be maybe too bad of an idea?
I mean, then you're sitting on $100 at least. Not if it does fail, it's not that big of an investment you're losing. Go ahead, sorry, Fish.
Yeah, and take with the premium too.
Yeah,
exactly.
Offset it.
Yeah,
and I mean,
I'll take a look at
I'm
it.
I'm already sitting on 300 shares, 300 shares total between two different accounts. So
yeah, so if you were to sell,
go ahead.
No, I was saying, so if you sold a cash secured put, $1 cash secured put, you get a $13 premium out of $100. You get a 13% ROI on it, which is very, very nice for September 19th, which is this week.
That's not bad at all.
It's not bad at all.
13% in a week, you can't complain. But it's because it's very risky, and so I definitely wouldn't be necessarily buying because I mean you can if you're right, you're going to get it right, but there's going to be a huge IV crush once whatever the result is, right?
Exactly.
So something to be aware of.
Yeah, for sure. And then, so I like another thing. So Ty brought up this really good point here about having these rate cuts would be really good for those small caps, right? So, and that's kind of like what the logic is, right? Is that, small caps benefit from lower rates because they're not profitable. They're borrowing money as leverage to be able to grow and expand their companies, stuff like that. So maybe some small caps potentially could be a very good momentum play, maybe because, again, if you cut rates 3 times this year, that allows people to borrow at cheaper rates. You borrow at cheaper rates, you're then able to, expand your company, to hire more people. And that's kind of what the idea is behind the Fed. The idea behind the Fed is to now cut rates to essentially hope for the best, that it's going to stimulate the job market because people can borrow cheaper, then they can start hiring more people, and then they can kind of bolster the economy back up as a result of it. But now it's going to be interesting to watch what happens to inflationary pressures as these rate cuts come in. What is the market going to do when you see inflation come in ticking, maybe comes in at a huge miss? Who knows what's exactly going to happen, right? So it's a very, very interesting idea to keep in mind about. But I think small caps, I don't know about you guys, but maybe small caps might be a decent option here. I know also another good play is real estate companies. Like Open Door obviously was up 80% at least this week because of all this crap going on, which is, I still think it's a meme stock, personally speaking. It's still a meme stock to me, but Open Door would have a crazy run up on it. I don't know if you guys saw that or not. It was insane.
How into
I was
$10 or
smart.
whatever.
Yeah.
Go
I
ahead,
was
though,
smart
Fish.
enough to sell it 3. I was going to say I was smart enough to sell it 3.
You never know, man.
Exactly.
I
I mean,
keep
I bought
on.
it at like $1.
Yeah, there you go. I keep on before this run up on 10 earlier the week. I was like, I'm gonna do something, and then I was like, no, this is not gonna keep going up, and then it goes to 10. I was like, okay, well, I'm gonna keep second guessing, I guess.
Right.
Yeah. That's one of those things where it's like, like real estate companies like Open Door, for example. I know Loan Depot, as Bread Boy shouted out in the chat. Loan Depot's another big one they're talking about because they do things with mortgage rates and stuff like that. But imagine, and this is just a huge speculation here. We have FOMC Wednesday. These companies, Loan Depot, Open Door, would crash so hard if the Fed comes out and says no rate cuts this week. They would crash so quick.
Oh yeah,
Guaranteed.
for sure.
I mean,
And
what we're not considering is that the rate cut could already be priced in for these. So if they get the rate cut, they're not going to shoot up necessarily. They could already be priced in.
Right.
We don't know. But retail investors might just freak out and be cream in their pants or something. I don't know. So
yeah.
Yeah, man.
And I wonder. So Atai, you say that not 3 are priced in, but 2 barely is. For the rest of the year, the prediction market is looking at about 3 rate cuts. They're looking at bringing down about 3 cuts between now and the end of December is what they're looking at right now. So I think the market's trying to price those in right now, and having those 3 rate cuts there. But imagine the Fed comes out and it's only like a 5% chance right now. Imagine the Fed drops a 50 basis point cut Wednesday. Do you think it's going to push these stocks even higher if it's a 50, or do you think it's already priced in no matter what? What do you guys think about these kind of loan companies?
Oh, I think it pushes it higher if it's a 50. I think it's only a 25 that's priced in.
I think
Yeah, I would definitely agree.
Yeah,
I
I
think
would, to be honest.
you might be onto something there, Fish. I think period we're pricing in, I think, more than anything the number, and then that would equate for the total. So yeah, maybe if it's 50 the first time, I jump it up quicker, but then that means that later on with the further ones, it's not going to affect them as much, because I feel like the what we're pricing in is whatever people are expecting, 3 or 2 or whatever.
Right.
Exactly.
And another one I know that benefits from it is Rocket Companies is another one that's been having a pretty good momentum swing right now. Rocket Companies has been doing really well. RKT ticker symbol has been doing very, very well as a result of it, because they are a company that does really well with mortgage rates and loaning and stuff like that. And Rocket's been on an absolute rocket. I hate to say it, but it's been rocketing up. It's over $20 a share right now, I believe. At least, 22. Is that what I'm seeing on trying to make it screen? 22, 23, 20. I
Got
can't read.
about 2110 right now.
Yeah, so it's been up, and I remember when it was down like $10 a share. Now it's up like 50% in the last probably like 5-6 months, I would guess. It's just been rocketing up because, again, it's these interest rate cuts, stuff like that. They're going to benefit from mortgage lending and stuff like that. And I'll give you another example, and it's kind of what I called out I think a month ago when we were doing this podcast. Is that I was talking about Toll Brothers doing very well, and Toll Brothers is actually, is up at almost 150, and I think I called out like 135, 136, at like 150 right now, because they're going to benefit so highly from these mortgage rate cuts, right? So having this kind of return, it's benefiting a lot of those real estate companies for sure. But I think also what I agree with is Atai says in the chat, he goes that people really know Powell will stay strong. And honestly, I can't think of a time. I don't know if you guys think about it. Has there been a time where Powell has really surprised us with a rate cut or a rate hike? I don't think so. I haven't thought of one, anyways, where it's been like, oh, we're gonna have a rate cut, and then he just doesn't do it. Have you guys thought of one? Do you guys know of anyone that was like more recently? I don't think so.
I can't.
I don't.
No, I can't either. To be honest with you, I feel like last year when we had a rate cut in September, he set the door and the tone for it the same way he did this year in Jackson Hole.
Yeah.
He's very transparent. I feel like.
And that's why I think like these markets are really like pricing in like a 0.25, basis point cut that we're looking at here, which
Exactly.
is good. We don't. I think right now, since we're walking on such a fine line in the economy right now, I think any surprise is where the problem is going to lay in the market here. If we can kind of walk this tightrope, walk very slowly, try to make it work without surprises, I think we're going to be fine. I think. And again, people are starting to freak out now with recessionary fears and stuff like that. And like, oh, there's like a huge chance of a recession. But like this line, if we don't, like, the last thing the Fed should do is try to surprise the market. They come out and they drop a 50 basis point cut. That's going to shock the market no matter what. They come out with no cuts in this week, shock the market. You like, this market is walking so much on a fine line. You got to just give it what it wants and just hope that everything plays out. In my opinion, I feel like, I don't know about you guys. I don't know what you guys think about that kind of idea, but I think they have to. Now is not the time to surprise markets, in my opinion.
Yeah. No, I completely do agree with you. Like, if we get a 25 base point rate cut on Wednesday, I feel like we might have those typical FOMCs where we have a run up, then a run back down, and we end the day flat, right? Because that, in my opinion, has been priced in already, right? If we make a new all-time high, sure, let it be $2, $3, nothing insane out of proportion, right? They come out and say no rate cuts, then I think we're selling off everything that we've basically been running up,
Yep.
since 620 all the way to 650, right? And then we'll see ourselves back at 615s, maybe 605s, right?
Yeah.
And then if they come in with a 50 point, I feel like that's going to set up a crazy liquidity grab. Retail's going to come and they're going to put all their money into the market. There's going to be a melt up, and then that's going to be the manipulation. And then we're going to have
Yeah.
a nice distribution afterwards, in my personal opinion. But yeah, we just got to see what happens,
Yeah, Fish, what do you think about that? What do you think? You think the Fed should just really walk like a very, just walk it down, basically, and not try to shock anybody, right? Just walk it straight down and make it as obvious as possible what they're doing. What do you think about that idea?
I think that's exactly what Hal is going to do. I really do. I don't think that he's stayed so strong this entire time. He's not wavered at all. I think that he's showing he's been transparent and shown his hand. I think that what we're hearing is probably correct with the 0.25. I agree that if they do shock a market, it's going to be absolutely insane either way.
Right.
It's either going to be really, really good for a hot minute until they grab liquidity, like China said, or it's going to just be really bad immediately. One of the two, and the market's just going to drop.
Right.
So,
I know.
but
Yeah, 100%.
I think that we do get the 0.25 cut, and I think that we meet expectations and the market stays happy.
Yeah. Now so since you're bringing up that idea, the market stays happy, right? Market's going to stay happy. Oh, cool, we got a rate cut, just like what we wanted, right? And Trump's been wanting it for a while. It's going to put him on the sidelines maybe a little bit more. But now the question comes into play. We get a rate cut in this week. All eyes are going to go to inflation data next month. Not next month, the following month, because next month inflation data is for this month.
Right.
So we're gonna be looking probably at the next big one to probably watch to see how the rate cut is done is CPI PPI November, I believe, right? Because October is for September, November is for October. Yeah. So that's going to be the huge thing now, is that all eyes are going to be focusing on the end of the year inflation data, jobs data, everything now, because this is where I think the euphoria will end. And you can quote me if I'm wrong on this one. You can give me, obviously, everybody give me their own 2 cents. You guys have all given me your own insights on this. If this rate cut comes in and data doesn't change, we're tanked. It's not. That means nothing's going to stop this market. Nothing's going to stop. Nothing can fix it. That's how I'm looking at it personally. If you are putting a Band-Aid over the wound and it still bleeds through, that Band-Aid did absolutely nothing, and we're going down. That's how I'm looking at it right now. I'm thinking end of the year, if data does not respond well to rate cuts, we're going down quick. I don't know. I don't know. What do you guys think about that kind of logic there? I don't know how you guys feel about that.
I think we'll go down, but I think it happens Q1 next year, not this year, But I'm hey, that timeline is tight, relatively.
Right. Right.
You know?
Because all eyes are going to be on now. It's okay. You got your rate cut. Okay. Now what happens? You wanted your rate cut. You fought for a rate cut. You've been fighting for a rate cut for the longest time ever. You finally got your rate cut. Now what happens? Now the market still doesn't do anything. Now what do you do? Or now jobs data still sucks and inflation's still higher. Now what do you do? You know, like that's like what else is there to do? You cut again? Like then what's that going to do? The first cut didn't really help ease it at all. So a second cut, is that even going to ease it? Like I don't know. You can't just keep putting band-aids over a wound that's bleeding too much, right? You can't just keep putting them over there. Like something else has to give. And that might be what the market gives. Maybe it is, like you said, in Q1 next year. You know, maybe just the data just doesn't work well enough. And then it's like, nope, you can put a band-aid again. You can do a band-aid again. Nope, still doesn't do anything, you know. And it could be right because we have 3 rate cuts predicting in for the end of the year. So maybe next year, let's see what those 3 rate cuts do, and then what happens. You know, if nothing changes, then this market I think is going to change. I don't know, Ryan. Do you have any thoughts on that one? I know I haven't asked you anything about this yet. What are your thoughts?
You're okay. I mean, I honestly I don't know. I think rationality has gone out the window, and I have no idea what's going to happen. So I'm just gonna trade what's in front of me, and I have I have no idea. I mean, but I think you're right that maybe if we don't see some sort of improvement, people could freak out, maybe. But
yeah, that's my biggest concern.
Like Fish said, it might not be till next year because if they're thinking they're going to be 2 more rate cuts, they might be waiting for those other 2 to see the effect at that point too. I mean,
right?
Who knows? All right, who knows?
Dude, all I know, it's gonna be a wild end of the year, you know. And you know what? Maybe we get that nice euphoric run at the end of the year, like we always usually get in like November, December, where it's the holidays and people are excited, you know. And I think what'll be interesting also to see is I would be curious to see what the jobs data looks like with seasonal hiring now also in there, because if jobs data comes in awful still with seasonal hiring, usually seasonal hiring for the holidays usually pushes up usually pushes up that jobs data, right? Push up the labor market because it's like, oh yeah, we hired 100 employees for the season, for the holiday, whatever the case is.
Right.
So I would be curious to see how bad the jobs data is, even with seasonal hirings in November and December.
So I don't want to dive too deep into my reasoning, but you were talking about the Band-Aid, and I'm just believe that we have a Band-Aid for like up to maximum a year. I think that's as long as the Band-Aid can last. But I do think that we have a Band-Aid and we keep going, which is why I said Q1 at the earliest, in my opinion. But yeah, I really do think that we get the Band-Aid because we've got end of year coming, and there's a lot of family time and stuff like that, and people get to talking, and I just think that the market's going to be good at that time.
Yeah, no, absolutely, for sure. I think we have a Band-Aid for now. I think the rate cut is going to calm the market down a little bit, personally, because it's been this constant like fighting back and forth. Trump versus Powell, rate cut, no rate cut, right? And trying to get Jerome Powell off the Fed chair, trying to get him to leave, trying to catch everybody anyway doing whatever, I think this rate cut is going to be like the final, like, you know what? Cool. The rate cut is going to make Trump a little bit happier. Maybe not a lot, but maybe just a little bit, give him a bone a little bit here. And, people will get off Jerome Powell's back for a little bit. It might create a little bit of a calming effect for the short term, right? Obviously, time will tell what the market's going to react to it in this case, but I feel like it's kind of starting to do that. I think the big thing also is that we still know that China and U.S. don't have a tariff negotiation finalized yet, I believe. Right? Nothing, not even close to that one. That's still uncertain waters, even talked about. Thankfully, we haven't really heard much about tariffs recently. I don't know about you guys. Have you guys read anything in the markets about like tariffs or anything like that besides in earnings reports?
No, we've been focused on other things. Nobody's been threatening tariffs. Thank God.
Personally, I haven't heard anything about that yet. But yeah, I feel like it's better for the market personally, and I feel like better for Trump as well, and his, in his 4 years that he's going to be here, he wants to claim the best market in U.S. history. So anything tariff related is going to definitely ruin that little trip right now. So it's best we steer clear from that conversation and focus more on these upcoming rate cuts and, you know, the 10-year yield dropping and all these other things as well. What do you guys think about the 10-year yield? You guys have seen that recently? It's been easing a bit, but I don't think it's because of like anything good, to be honest with you. Growth rate is softening, like you were mentioning. Inflation is not re-accelerating, which is, I guess, all right. But it's just because of the rate cuts we're seeing soon. But yeah, it's just so much indecision coming. What do you guys think?
I haven't looked at 10-year. Let me take a look at it really quick and see what's going on with it.
I was taking a look right now. It looks pretty interesting.
Yeah, I mean, it's definitely, you know, it's nice that, you know, it's coming down. It's come down a lot since the beginning of the year, which has been really, really good. But what's the 2-year looking like also? Because the 10-year, 2 year is what people like to watch a lot of with the treasuries. You can see like what's going on in that case. We talked about that, I think, last week. Ryan, was that during trivia? We talked about the 10-year, 2-year last week.
I think it was a trivia question for you. Yeah.
Yeah, because the 10-year, 2-year is like a huge, when it inverts, is like a huge problem usually for the markets.
Look at that.
Usually.
That's something I'm pulling my notebook out for.
It was either that or this week.
Yeah.
I can't remember, Fridge.
I mean, I'm trying to remember it also, but let me see if I can pull up what the 10-year, 2-year spread looks like right now.
100%. I feel like in our specific situation, it's signaling more caution rather than a booming economy. You know what I mean? Yeah, stock market's booming and all these things. We're making new all-time highs, but yields are falling mainly because the markets are expecting slower growth ahead. You know what I mean? Especially from the job markets, like you said. Come November, October, I don't think it's gonna be as good. You know what I mean? A lot of things are looking bad. So it's like AI needs to come in and replace very fast, before all of that gets priced in, I guess.
There's another aspect to what China just said that I hadn't thought about before today. And what that is so we already know that the boomers are leaving the workforce, right? And AI is going to replace a lot of jobs. We know that. But what I don't think that we've been focusing on is their 401ks leaving the market. Right? So the boomers are
right there.
Right. So the boomers are going to quit working. They are going to start dipping into their 401ks. They will be selling off. They will be dying. They will be donating to charity. They will be leaving inheritances. But that money will be flowing out of the market at some point over the next 15 years.
Right.
I know that's not tomorrow, but this is something to start thinking about when you start thinking about.
That's definitely a huge decompression phase. You know, I feel like that's the best way to kind of call it. Like we're decompressing all of that liquidity and shifting it out into another. Either, you know, it depends on the situation, obviously, in the state of the economy at the time, but that does matter a lot. It's definitely something to think about. No hands left in old folks' homes, just siphoned off the older generations. Yeah, literally.
Yeah. I will say also that, you know, I mean, talking about 401k, it's a very, very good thought process, but there was also articles that just came out that said that the number of retirement savers, there's a lot more people that are now 401k millionaires, you know, so it's at record highs for how many millionaires we have there. So they said that the article said number of 401ks. I mean, obviously it makes sense because as markets rally, of course you get more millionaires, right? That's usually how it should go. So, you know, but, you know, we're having, you know, more and more people that are in those 401ks. So, you know, like Fish is saying, you know, what's going to happen? Well, when you hit a millionaire status, you know, you sit on the sidelines for a little bit, or maybe you're retiring, you're going to get rid of that money. You're going to either donate it or buy it or invest it for, you know, your future children or whatever, your family. But yeah, I could see that 100%. You know, of course, everybody, and it's the most common thing that everybody always says also, where it's like everybody looks genius in a bull market. Everybody looks like a genius. Everybody 100%. Does. It's where you make money in a bear market. Those are where the real traders are actually going to be, right? So everybody's being a millionaire right now in the 401k field because, of course, the markets are at all-time highs. Like, how could you not, unless you're not invested? So, you know, it'll be interesting to see what happens, like Fish is saying, about the 401ks and over the next, you know, couple of years, what's going to happen when people start taking their money out and stuff like that.
Yeah. I mean, look, I'll be real honest with you guys. You're talking about 401k millionaires. I mean, I don't feel bad saying it. Like, my father has worked his whole life and put his money away and, you know, lived under his means. And he's well over a 401k millionaire, you know? And the fact is that he's going to die in like 15 years or so, 20 years. You know what I mean?
Right.
And until then, whenever he stops working, that money then starts flowing out of the market to take care of him. There's a lot of fucking people like that. So it's not all going to come out at once, but it is going to be a drain.
Right. And I think that's like the biggest thing that also people are starting to think about is like, with the AI software and AI, taking over for the labor market and stuff like that, is that like, what if we hit, a high unemployment percentage, how long until we bring it back? Because you don't need to hire. If you're hiring out and using AI to do stuff for you, when do you need to hire somebody back in the office to take over for the AI? Like that, like how is that going to be a thing? So the big fear I think a lot of people have also is what happens when unemployment hits such a huge percent as a result, and then you can't hire because you don't need to hire. Why do you need to hire when you can just have someone, an AI software do it for a fraction of the cost, right? Like, what's the point? So I think that's going to be the huge problem that we're going to face, and we're going to face it at some point. We will face it, but when are we going to face it? I have no idea, obviously, but we're going to face it at a point where once unemployment skyrockets, we're in some trouble. And it's not going to be trouble for a short-term recession. I think it would be a longer-term recession when we hit that, in my opinion.
So I agree that it'll be a longer term recession, but I also think that at that point, with AI being involved, since it'll be something we've never seen before, I think the jobs market might actually change.
Okay.
I think that what we will end up seeing, and we've talked about it before, I think what we'll end up seeing is a lot of people that are not going towards a traditional 4-year degree and instead are going into trade trade skills, electrician, carpentry, drywall, plumbing, stuff like that, because back in, I think it was the early 90s, the largest number of new self-made millionaires were from blue collar industries. And then I think that number changed, but we may end up going back that way. Okay. So that's just one thought process.
Yeah, no, for sure. I mean, I think this thing also is that like we're gonna adapt. We always adapt as humanity. We were always gonna adapt to situations, right? We had the dot-com bubble crisis of 2001. We adapted to that one afterwards. We had the 2008 housing crisis. We adapted to that afterwards. We learned what to do, what not to do, right? Even during the pandemic, we learned that hey, we went into a short-term recession and then we recovered afterwards, right? So I think we are still going to adapt to it. We always come out of recessions, okay? We always have. We've never not come out of a recession. Some of them take longer than others, for sure, but it's going to be a time of how long until we can have AI not just there to take jobs, but then also how AI can help create new opportunities for people, right? And I think that's kind of what your logic is, where it's like AI is going to help us create new opportunities in the labor market, but how long until we realize that and we can use AI to help us build, into, blue collar workforce again, or whatever the case is, wherever the switch is over afterwards. We're going to come out of it. Just this is obviously a matter of when, right? That's kind of how I always look at it.
I agree. It's always just a matter of how long,
Right. That's why people always say, it's never bad to invest. Even buying index funds, buying SPY, buying QQQ, buying whatever index fund you want to get into, VOO, whatever it is you're looking to get into. That's why everybody always says it, because you look at any kind of stock chart from any of these, we always come out of it. And the U.S. market has always come out of it no matter what. We went through the Great Depression back in the 30s. We came out of it. We went through, all those other things I listed earlier. We came out of it. We always come out of things. We always make all-time highs no matter what. But, that's why everybody says stay invested, right? Go ahead, Fish.
I'm sorry. I just wanted to tag on to what you were saying because I agree with it wholeheartedly. If you are investing in index funds or indexes in your 401k, when the market crashes, please do not sell. Please don't panic sell. Instead, what you should do is you should scrounge up your pennies and buy extra because it's on sale and it's coming back.
Right.
That is the way that wealth is generated over time. Well, that's one way wealth is generated over time is buy the dip, buy the dip, buy the dip. You do that for 20, 30 years, you're going to retire pretty nicely.
So speaking of buying the dip, I was looking at some like potential leap options for sure, and taking a look at like, okay, what are some places I can do that are leap options? One of my posts on After Hours was Sweet Green, which is down, basically like to like a super, like it's not like 70% from the year, I believe, for the year to date. But another one I also like that, I don't know if you guys saw this one also, but Trade Desk has been getting hammered recently. Have you guys seen that? Trade Desk is getting destroyed right now. It's down to like 40 something, 44, 45. Ticker symbol is TTD, by the way, bro.
I was just gonna tell him. I was like wanting to yell it out to him because he was having such a hard time, but I didn't want to interrupt you.
Yeah, don't worry, bro. Like,
I was like, this dude's typing everything but the ticker
Yo,
symbol.
I'm typing it. I'm like, all right, if you type into the whole thing, it's got to come up, right?
Yeah. I do that shit, bro.
So Trade Desk is getting absolutely slaughtered. Like it has a huge gap down after bad earnings and stuff like that. I remember from a while ago. And then like even when the market was up like 2% after Powell had Jackson Hole, it didn't do anything. And then there was one day like 2 weeks ago, it was down 11% in a day. I was like, why? Like I don't know. Like there's a lot of people who are selling Trade Desk. I don't know why, but I'm kind of intrigued to maybe look at a potential long position here. Potentially, I'm not really quite sure what you guys think about it, but it's in the S&P 500, so it's a company that's you don't just get into that for no reason, right? So I'm just curious, like it's coming down to those bottoms again. Like, is it a good potential possibility maybe to get into for Trade Desk? What do you guys think?
Until we find out why, this is the first that I'm hearing because I don't really follow this. Oh wow, yeah. So I mean, wow, there's divergence there. Shit.
Yeah.
Wow, yeah, that just backs up what I was going to say. Is before I would buy, I would want to make sure that it holds this level and doesn't come down anymore. Because if it does not hold this level, then you're going to come down even more because you're then going to be entering a bullish FPG.
Right. And and Mirage, thanks for tuning in, Mirage. Always appreciate you tuning in for these. But so yeah, the earnings obviously were not that good. I remember that for sure. But then it also came down, like I think it was like last week, like 11%. I don't know why. I was trying to figure it out. But it just didn't like whatever it was. Like so on the 10th, it was at 52, and now it's down at 45. So I don't know what that sell-off was from. I don't know if that was people just being like cashing out. I don't know what the volume was that day. I don't know what people are seeing, but like it's a company that's not, the PE is 54, pretty relatively high. Earnings per shares are positive, which is really good. 1 year target is $74. But it's at 45. So you're looking at like, like almost a 70% upside potentially in a year out based off of what the market or based off of what Yahoo Finance and the analysts are saying here. Yeah, I've always been curious to see, like, what you guys thought about it. I don't really know.
It seems like they have a growth concern with it.
Yeah, Morgan Stanley downgraded it. But go ahead.
Yeah, that's what Mirage is saying.
Oh, my
these
bad.
downgrades, you know what I mean? All they are is temporary. And then once you get out of that situation, and then you start to see that, everybody starts to buy in, and then you're like, oh my God, wow, the company's back again. I feel like these are institutional buy opportunities, in my personal opinion. You want to see when the stock starts to bottom out, obviously give you signs of consolidation of base at a specific area. It can't be any area. And once it like, for example, this right now on my chart, right? This is a beautiful area to consolidate. And if we hold this area for consolidation for a while, eventually we're going to, leave all of this behind. And then while everybody's looking at another stock, this is slowly going to start growing and working its way back up to these highs. And then eventually one day everybody's going to be like, oh my God, Trade Desk is back to $70. Let's get in. And then boom, 80, 90, 100, right? Kind of like how these other stocks usually move, right? CoreWeave went down to like $80, went back up to $100 whenever nobody expected it, right? You had a Robinhood, right? Went down to 97, I think, and then went all the way up to 120 when nobody expected it. So it's really a matter of, being there when nobody else is looking, right? And when I say nobody else, is retail, right? Because when retail isn't paying attention, that's when everybody else is buying. And by everybody else is big money, right? So that's what it comes down to, in my personal opinion, right? These kind of things we can work past. I don't know too much about the fundamentals of the stock, but if you guys know deeper fundamentals of this company, if they have a great, a balance sheet, I guess, qualitative, quantitative analysis, and all that good stuff, then eventually it's going to probably be a good stock to just hold for the long term, like Fridge mentioned.
Yeah, I mean, I'm looking at it, and looking at like just a quick financial glimpse at it. Profit margin 16%, really, really good. Usually you want like 20 or so. Return on assets is low, about 5% or so. Return on equity about 16%, which isn't too bad here. And taking a look at more of it, holding a lot of cash. Debt to equity is 12%, which is super low. Like you basically have a lot more equity than debt in your actual account, which is really, really good here. Earnings per shares are positive here. I mean, they're sitting on over $1 billion in cash right now. Like I'm trying to really figure out.
Like that, how is that a growth? Now, after all that, after the quantitative analysis that you just gave us, how is that a growth problem, right? If they put the money in the right places, then this isn't really going to be a growth situation. This is just something to get everybody out, capitulate the stock real quick.
I just can't believe that one down. I mean, was it only the downgrade from Morgan Stanley that made it go down? Like if like that one, I've seen companies get downgraded left, right, and center by like 5 companies by 5 major firms at once, and nobody cares.
Literally.
It can't be just the one downgrade.
It was that, and then there was something with because Robinhood has that stupid AI thing. It's something about like a competition with Amazon and Netflix ads or something. I don't know. I didn't read that closely.
It's just fear mongering.
I literally just looked at it because you guys were asking.
I don't know, man. I'm looking at, I'm thinking, again, like it was trading at over, 140 at one point, obviously the all-time highs here. It's down at $40 a share now. And, it's gotten, it's almost like kind of reminds you like a UNH play where it's like the stars kind of aligned against it almost in a way where it had bad earnings and it had downgrades, some of that. And that's gotten slaughtered. But now United Healthcare is obviously back up at 350, but the Warren Buffett purchase has definitely helped it. But I mean, I don't
That's the thing.
I don't hate Trade Desk where it's at right now in terms of a price.
Of course not. 9 times out of 10, that's the perfect storm, like you just mentioned, right? But Buffett got in. Why? Because the perfect storm was set. The whole situation was where it needed to be, right? Where was UNH when Buffett bought in? Like 250, 240? And then after that, it was crazy. And then all the way to 270, 280 the next week. And now we're talking 335, 350. And by now, it's still, I'm not gonna say it's overbought, but it's still at a good place where it's not oversold either. You know what I mean? Or none of that situation. But yeah, it's the same way you got to look at Trade Desk, right? It's in the S&P 500, like you said. It can't fail, right? They put it in there for a reason. Look at all these price action that we have to look back at. We have good history, right? Over $100, right? All we need is a good consolidation, a nice base, and a good reason to go back up. And good reason is what I'm hearing from that quantitative analysis that you just gave me. Right? If they put the money in the right places and they have good operations, then investors are gonna put their money where their mouth is on this one.
Yeah. Wait, hang on. I think I just found out what it is. So it's a market downgrade. They downgraded it from. Oh, that's why. That's a huge downgrade from Morgan Stanley. They downgraded it from $80 to 50. That's a huge downgrade.
They want it to be right. Morgan Stanley's not gonna be wrong. Morgan Stanley's never gonna be wrong. You know what I mean? So they made sure that fucking $50 hit.
Right. Like, and then
they gave the price projection, and then they fucking short it.
Right.
Literally.
Also, then there's another company. So Plato Investment Management sold 11,500 shares of Trade Desk, which is, I mean, but it's not a lot, but still. But
yeah, it's really not. He probably sold it while they were selling it off. He probably panic sold it.
Oh, Bank of America also downgraded it to 55, down from 1. Dang, Bank of America downgraded it. I don't know how recent that was, but Bank of America put it down to 55 from 130.
It's like all the banks went against this one. It's kind of like when Citron went against fucking Palantir and it got smacked. Exactly what happened with Trade Desk. All the banks went against it for a little bit, and it seems like they're probably gonna buy back in when the time is right.
Yeah, it's definitely something that I have on my watch list. It's not at my level just yet. I think my level of buying. Let me see if I can put my Webull on my computer here really quick. I have a level of buying it if I want to look at going into a possible leap option for Trade Desk personally. And my level is at around. I'm looking to get into like the 40 when it gets to like 42-ish. Is what I'm looking for.
It's not bad.
I'm looking forward to come around like the 42. $40 range. It comes out like the 40s. That's what I'm gonna probably want to get in at. Is what I'm looking for. But it's getting close. I keep watching. I'm like, come on, come a little bit lower. Come a little bit lower to the 40s. But so that's one company I've been really watching as a result of it. Do you guys have any stocks you guys have been watching recently that you've been like, kind of like hoping to either buy in at or buy leap options with, or anything that you're kind of interested in getting into?
So
Go ahead, Fish.
No, go ahead. No, because I got one that I wanted to bring up.
Oh,
Real
well, then
quick.
bring it. I was just
Nike.
joking around. Yeah, you go ahead. Yeah.
Okay. So Nike, right? One of the things. So like I was on vacation, and what I was doing was just sort of observing and seeing what people are wearing, right? Because the statistic is that the top, I think it's the top 30% of earners supply 60 to 70% of spending, retail spending. So I wanted to see, what are people actually using, right? And I like to look at shoes, right? So that's what I like to look at. And what I noticed when I was in New York is there were a ton more people wearing Nike products than there was 2 months ago when I was in New York. And so to me, yeah, exactly, right? So New
That's
York's a
that
high cost of
qualitative
living area.
analysis. Yeah.
What's that?
That's that qualitative analysis, the quality of the product and being able to see it everywhere. It's brand. It's a big, huge brand. In a sense, in a quotation marks, too big to fail because it's so widely known, right?
It's exactly. Well, but they were going down, right? Nike was going down.
Mm-hmm.
Well,
And
tariffs.
then, they got a turnaround. But I mean, like even their brand was going down. Like I wasn't seeing as many people wearing Nike. But I've noticed that they're starting to come back. They are in where I live in DC, and I noticed in New York they were. So I'm thinking maybe this is market wide. And we have holidays coming up, and we know that people like to get expensive shoes for holidays. So that was my 2 cents.
I
Not a
like
bad
that.
idea. I like
I
that.
think just to add on to that, Fish, like it was like a couple weeks ago we mentioned Nike on the stream too. Like I charted it on the monthly chart. I feel like Nike is gonna be one to watch for the next like 2-3 years for sure. Like it's gonna definitely heat up as we get into those years of Olympics. Get into those Olympic years, we're gonna start heating up. You know what I mean? 80, maybe 90, maybe 100 once we get to the Olympic year. And then
Yep.
from there, we're gonna see what happens. But yeah, I'm on the same page as you, to be honest, bro. A lot of consolidation, buyers got squeezed out. We're seeing a little bit of life, and this is just a slow mover. That's all it really comes down to. Being able to have the patience and seeing where the stock goes and how long it takes for it to go there. Because I'm looking at a monthly chart, and you guys know each one of these candles it takes a month for it to play out. So if we're looking at a $100 projection, right? Just an example, right? We're looking at $100 here. We need for the next couple months a retest down to 67, right? And then FEG test for support, grab some buyers, and then just a nice swift continuation chop out of that area towards 80, 90 by 2026 late, maybe early 2027. We're gonna see 90s, right? That's how it comes down to in terms of like being able to project where this chart is probably gonna go. But if we get below 49, $50, right, or even $60, and it's safe to assume that this is not one of those stocks you want to pay too much attention to, right? In the sense of the long term. But yeah, this is fire. I
Love
definitely
it.
do fuck with that. Gio said the Nike store in Manhattan was the busiest I've seen it since May. A
See,
lot of people are getting their Nike up.
Yeah.
that's
Ryan, do you have
funny.
any stocks you got, Ryan? Anything you're watching? Like even if it's trade options possibilities. I have a couple on my end, but I want to know. I have two that might be really good plays for our future moving out. But do you have any plays, Ryan, for us?
I don't have anything. I'll see if I think of anything while you guys keep talking. I don't really have anything off the top of my head at the moment.
Okay, I'm
But
looking
I've
at
I've heard
two, and
about
here's my
Nike a lot
two.
lately.
Nice. That's awesome. Yeah. I mean, Nike, man. I mean, it's a name brand. You're paying for the brand. Everybody knows the brand Nike. You talk about it, And again, I think the idea behind seasonal holiday, the holidays of the seasons, I think it's a really, really good shout out. For sure. No matter
Mhm.
what. And again, I don't know what brand they usually rock with at the World Cup. World Cup is next year also. I don't know what
That could be, yeah, there you go. So it's like
I
Nike
don't
has
know. I don't know what
multi
they
things.
use.
I think they usually do. Nike, I always see Nike everywhere, man. That
Either
fucking
gonna
logo, that check mark,
It's probably either going to be Nike or Adidas, one of the two.
I'm gonna have to find
Adidas
out
is a
right
good
now,
one too.
actually.
Adidas was the other brand that I actually saw because I really like Adidas a lot, but nobody wears it like where I live. But I noticed that there were quite a few people wearing Adidas up in New York. I'm not,
Interesting.
I'm not saying they'll transfer nationwide though, or globally.
Yeah, they say Nike's going to be a major apparel provider for 2026 World Cup, supplying jerseys and boots for several participating national teams, including the host nation U.S.
Nice,
Host nation
nice,
U.S. There you
nice.
go, right there. So if you're thinking,
Hey,
don't even
that's
think about the
big.
Olympics, bro. Talk about the World Cup next year. Even do that first, and then you get to the Olympics after
Mhm.
that. Be a
I
very good
like
long.
that.
That'll be your
That's
springboard into the Olympics. No pun intended.
that's funny as fuck.
What's the longest you can go out for Nike options? You want to go like a leap option, probably like December 2027, maybe.
If you could do
Or
December
January.
2027, that's
I'll
not
tell
bad,
you.
bro. Like I
You can
would
do
get
January
$100 growth.
2020, January 2028. You can do
Wow.
if you want to
Oh,
buy an option. Well, it just got released. It looks like because there's no actual prices yet, but it looks like they just opened up the 2028 ones.
the next couple of
So
years are
that'll
going
be
to be
available
very
Monday.
crucial for Nike. That's
Yeah.
100% sure. Next couple of years are going to be very spicy for Nike. Slow mover, but it's going to be one that you know, like I said, under people's noses. Everybody's looking for the one stock that's going to make them a millionaire in one day. That's not Nike. You know what I mean? So if you're
Yeah.
a real trader and you're looking for the real, good stocks to invest in, maybe those slow moving stocks, it's one of them for sure. Definitely.
So what I'm looking at two, and I know we've talked about, I think, one of these beforehand. The one we haven't talked about, I'm looking at now recently is Target. I'm looking at Target right now, and here's why.
Nice. I
And
like
here's why.
that. Talk to me.
Target is down to $90 a share, which is fucking wild. I want, but before pandemic times, after coming out of pandemic, it was at 240. Obviously, they've had a lot of problems with like their marketing and their news and whatever. But besides that, right? Here's what I'm looking at it. Okay, if we get this point where the economy really slows down, people still gotta buy stuff. Okay, just like Dollar General was my call out, like 2 weeks ago, maybe long term as well. Dollar General will be pretty really well, I think, also long term. But people gotta go to Target, they gotta buy stuff no matter what, right? Also, on top of that, the stocks that do well in bad slowdown times and recession times are dividend payers. Target's dividend right now is 5% dividend yield because it's so down so much. So people, I feel like, may start to flock to those dividend paying companies more. Also, it has a PE of 10. Remember when United Healthcare went down to a PE of like 10 or 12 and then it got bought up and everybody was buying it up, right? So Target being down at a PE of 10 with a 5% yield, to me, I feel like could be a potential opportunity in case we get this big slowdown, because people want to still buy stocks, but they don't buy into growth. They don't buy maybe as much into Tesla or into Amazon, to the growth ones as much. They'll buy into the dividend payers because it's more safe in terms of uncertainty. So Target for me with a 5% yield, and it's coming down basically to that's the lowest since I don't even know when, like back in 2020.
This is a while. Yeah, the last time it was here was
Yeah.
October 2018, my brother. This is like some real shit.
Yeah, so I'm thinking that Target I think might be a not too bad of a call out option here because low PE ratio down at 10, which is crazy.
Yeah.
High dividend payer 5%, and everybody knows the name Target, and they gotta buy. People always gotta buy things no matter what. I see them, and I see people like they revamp and they rebuild Target plazas. They update them, they renovate them, those kind of things. Like my area, they've been doing it. So I feel like Target's definitely a play maybe for, especially for if you think about like slowdown, economic slowdowns. Target could be a good turnaround play. I feel like.
So I just want to mention that I agree with you, by the way. I want to mention that back in 2018, when we were at this level, I believe at that time, if my memory serves, that there was some sort of a backlash against Target for something.
Yeah.
And so it had consumers flee them, which they've recently had as well. So yeah, this is probably a very good time to go in and buy.
Yeah, I'm trying to always think about like what's coming up moving forward, right? So like my play, was Toll Brothers a little while ago. Was Toll Brothers because of rate cuts and it's done really, really well, which has been good. Stanley Works also. I don't know if you guys saw Stanley Works, man. Whoo, Stanley Works is getting close to $80. I called that at like 74. So I've been riding the wave on that one in my leap option a little bit on Stanley, but they've been doing some good products and stuff like that too. And Otis has been announcing new contracts as well, which has been really, really good for like servicing and stuff for elevators worldwide. But so those, Target, I think, is a good potential play to look into, as a rebound play. Again, when the growth stocks are taking off, what usually struggles is dividends usually more because people are pushing their money out of dividends into the growth ones to get, take advantage of those growth prices, right? So Target for me is one, and I know people have thought about it before, and I think we did it also, but UPS is still low. UPS is down at
Mm.
$84,
Mhm.
has a 12 P
84?
ratio, 12.5, and the dividend is 7.78% for UPS right now.
And I want to mention that we have, again, holidays coming up, which is
Yes.
going to boost profit for UPS.
Yep. And for me on my fib levels right now, the ones that I drew up for on my own chart, it's at the 50% retracement mark right now. My fib level of $83 or so. So, I'm
Fire.
kind of feeling it like it might be a nice little play to look at. And again, I mean, they began slaughtered for sure, and I get it, but I still see UPS trucks pulling up to my complex every single day, dropping off packages, see them on the streets all the time still. Are they going to be 200 a share? Probably not. But you buy a leap option now, you wait till it goes to $100 a share, you cash out, you still make some really good profit still. I still think it's undervalued. I think again, the dividend of 7% is crazy to me for UPS.
Yeah.
Because you just buy you buy into UPS, you put $100 in, you're getting $7 back just in dividends, and then you get the upside potential if it returns a positive. If it goes to $100 a share from 84, you make $16 on the share appreciation. You get $7 from the dividend. You're looking at 23% return on your $100 per $100 you buy into, right? So I've liked looking at the stock. I'm waiting for a little bit more consolidation. It looks like right now I don't think it's had it yet. It's still kind of having this little bit of a free fall moment for me. But once start to see kind of that kind of rebound, start to kind of see that stability built in, I'm looking at going long on UPS, at least, for the next year or so, potentially for sure. I don't know how far we can go for options, January 2027. And the options trade isn't even that bad. You can buy in the money for $2,000 for almost 2 years, for a year and a little bit longer than like a year and a half. So
that's automatic profit if it moves your way, at least, you know what I mean, by a couple of like $5-10, that's fire.
yeah,
And
you
got
buy.
time on your side.
Yeah, if you get the $70 call option, cost $1,900, so that puts your break even at $89 a share. It's at 85 right now or 84. It has to move $5 between now and January 2027. $5.
All you need is a good earnings, and that's it, bro. You're lit.
Yep. And again,
I
just like
like
Fish was saying, dude, you got seasonal, time coming up here. You got holidays coming around here, and again, also like people, I'm honestly shocked because I believe the CEO bought more shares at this level, and it didn't react. It still didn't react as much as people would have thought. And I'm like, the CEO bought more shares of this. It was like over $1 million worth. I'm pretty sure. So if the CEO is buying back into the company, I mean, that means something, right? It's not they sold off $1 million worth; they bought back into it. So I think that UPS and Target are good ones on my watches. So my watches now is made up of Trade Desk, UPS, Target, and Dollar General are my like big watch list ones. Dollar General I think has a little bit more downside to go for my charts. I'm looking at getting in around like $8 or so for Dollar General, but I think Dollar General is a good long-term play also for recessionary fears. The markets come down and people start panicking. What you got to do, you got to buy food, you got to buy utensils, you got to buy cereal, you got to buy milk, you got to buy bread. Cheapest place to go, Dollar General, dollar stores, all those kind of things. I'm with Dollar General long term too. PE is 19, not too bad. I think they have a dividend as well. Dividend is 2.26%. So, I'm not against Dollar General. Those are my like big watch list ones for my new ones for leap options right now. I still have some growth leap options, but that's kind of what I'm looking at right now in terms of leaps for you guys. Those are my kind of calls for now.
That's solid, man. I like that. I like that a lot.
Yeah, bro.
Yeah,
It's one of those things you got to think about. I'm always trying to think about like, if the market goes down and we get this pullback, what will do well? What's going to do very well? What's still going to be around? What's still going to be, kicking and screaming when markets go down? It's those retail dividend companies. They still gotta buy. You still gotta buy stuff. You can't just stop buying anything.
Right.
You gotta buy stuff. So that's why I'm thinking about Target, Dollar General are really good places to go buy stuff at. So.
And this goes back to the whole credit card thing that we were talking about earlier. Like as people can't pay bills, they have to budget tighter. You know what I mean?
Yeah.
So.
Yeah, no, 100%. And again, I still have those leap options on like ONDS. I have one on SoundHound. I have one on Big Bear AI still. So still those growth plays for sure. But trying to diversify a little bit so that way if I get slaughtered in one, I get a rebound. The other one will be really, really nice. That's my hope is.
I can see it.
So Ryan, did you come up with anything while I was sitting here just talking out my butt for the last 10 minutes? You come up with anything else?
You're good.
man.
You're
No,
good, man.
you got some fire stuff, man.
Yeah, I don't have anything. I mean, I have my own leaps currently in Google and UNH that I've had for quite some time that I'm gonna keep on holding. That's about it for me. I don't have anything new though, leap wise at least.
Nice. What are your leaps on Google? You care to elaborate what you got there?
I have a 135 leap expiring something like 26 or it's up like 215%. Doing just fine on that one.
God.
So
Damn, bro.
Goats.
I'm doing just fine. Yeah.
Doing
no
just
big
fine.
deal. Just 200%. Yeah, no big deal.
And so, I'm gonna let that one marinate for a long time, I think. I don't think I need to get out and then UNH, the one I did on UNH is like a 220. I think I got like a little less than a year on that. It was down pretty good, and then the Warren Buffett thing happened and it went back up. I mean, I think it's only at 70 in this case, but still nice.
It's at like 350 right now.
Yeah, but I mean 70% gain.
Oh yeah.
Yeah. So I don't have any other leaps currently though. But I don't know. I mean, we'll look.
Dude, I mean, keep it simple, man. If it stock's down, it's good to buy them when stocks are down. That's weird. You're basically doing Warren Buffett's advice: buying when people are fearful. You're buying up.
Yeah, I mean, both of those are honestly from Cube. Cube had conviction like earlier this year, and I just decided to buy both of them.
Love that,
fire.
man.
That's actually fire, man. Literally.
I'm trying to see if there's any other companies that are on my watch list.
I did a long-term Zebra on ONS too, but that's just 100 share long basically for like $370. See what happens.
What do you guys think about ONS?
2027 or something. I know people like it. I don't know much about it. I know Tron's all about it and Fish was talking about it, but hey, for $370, I'll see what happens.
Right.
Yeah. So all I know is momentum is there. They're getting contracts. They're getting investment. They're raising. The capital that they're raising is not for bad reasons. It's for good reasons. Some capital investment is bad, but this is all for very, very good reasons. I mean, drones, man. Drones are the wave of the future. So
yeah.
While I may not, like I'm not a warmonger. I don't want to see war happening. But I'm not going to be able to change those policies. So if I can profit from it, I will.
Yeah, but look at the volume on that though. Look at that. Like it was like not doing anything, and you get a huge uptick in the volume now. Like that's wild to me. Like it's just like no volume, and all of a sudden like 2025 hits. It was like boom volume. It was like boom. Trump administration in office. Yep, here we go. Drones, and then just volume took off like a rocket. It's insane.
Yeah. So ride the momentum, right?
I know that I have a $4 call option on right now for 2027, I believe as well. And I'm selling short-term cover calls on it as like kind of like a hedge almost, which has been nice. But right now I'm up $85. It's about 27% or so. And I still have till January of 2027 to go. So love that. And then I have a $7.50 cover call option on it, $50 premium on that one. So kind of offsets my cost basis a little bit. But I mean, that doesn't expire until I want to say like maybe like a month out or so. So, it's a little bit more of a riskier play. But, if it goes to 750 in October, I'm just going to probably I might just close out the long and wait for a buyback in because that'll be like a lot of money already made on the table if it goes to 750 by October. So I'm not really too opposed to it, but I don't mind doing this kind of play, like all my positions. And this is kind of like what brings back the idea of what we talked about before. It's like, how do you manage the market right now, right? So for me, like I have leap options, but I'm also selling call options against my leap options, because that way market goes down, cool, I offset my cost basis with these covered calls. Market goes up, cool, I make money on my leap options, and then I just limit my profit potential. But it's not a bad way to kind of cover both sides, where you're playing both sides of the field. So you're allowing yourself to basically say, hey, market goes up, cool, my leaps do a lot of value for me. Market goes down, well, my covered calls kind of offset my cost basis a little bit while we wait for a recovery, which is why it's not a bad play right now when we're at all-time highs for me, where to me, it doesn't matter. Market goes up, cool. Market goes down, cool. At least I still am able to offset my cost basis, then wait for another, pullback to then maybe buy in again, or, wait for a pump and then sell cover calls again, so it's been really, really nice in that case. Like I closed out, I had Grab Holdings. I closed that out, I made like 30% profit on a month on Grab Holdings by doing it this way. So hasn't really been too bad overall for me, but I think that's the way to do it, is play both sides of the field, hedge your positions a little bit, because we are in uncharted waters, I feel like, right now.
100% true.
Super smart. Make money on both sides if you can, and protect yourself. I love it.
No, literally, I think it's magical. Just to add on to the whole topic of like what other stocks we're looking at, I know Fridge mentioned RKT. I've been adding a little bit into my position at ASTS. I was thinking about taking out of my position that I have. I have a $24 entry average cost, right, for ASTS, and I was like, damn, should I scalp a little bit? This dip is huge. So then I went back to the weekly chart and I started to see, all right, what levels are we hitting? What's going on? Right. So once we started to come back down into these areas, I wanted to really see support. So I was like, all right, let me buy into these 35s, these 36s. And then we had a nice little close on Friday of a push back up into that 38 area. And then we closed there. Right. So this is exactly what I want to see as a setup for a push back up. You know what I mean? Applying my Fibonacci's here from the recent low to the recent high of this move. We bounced at the perfect zone of the 0.618. So I'm thinking this is going to be a perfect buying opportunity for ASTS. As we gradually move up, I'm going to continue adding into that position. My next buy-in zone is around 41 and then 46, and then I'm going to just ride the rest to $60 and hopefully a breakout. But yeah, I really do like the space sector right now, as well as the energy sector. I'm also looking at UEC. I'm not going to add on to my position. I feel like my buy-in price of $6 is fucking perfect. So I'm all right here. This is beautiful. If we get a pullback, I am planning on possibly adding to my position at around $8 or 10 if we do come back down to these areas. But Trump is loving, anything energy related. I see energy going up. AI needs to be powered in the right way, right? So UEC all the way. And on top of that, when it comes to this company, they're not really even profitable yet. You know what I mean? In the sense of like their quantitative analysis is not that great. So 2026 is going to be their year, right? I already got that information that most of the profits and most of the money they're going to make is going to start rolling in next year, through everything that has been happening this year. So if next year these earnings start coming in well and we start seeing some actual good results, I can see this number go way up to like at least 15, maybe $20, right? In the mid to long term, right? It's talking like 2, maybe 5 years. But yeah, I love this name right here. UEC and ASTS are my two winners. What do you guys think about this one?
Love it, man. It's a good, it's an interesting play. I never really think about uranium. I have a uranium ticker on my like watch list, but like I don't really actually get into uranium that much. But it's not that one. But then I think satellites, space, that kind of stuff. Definitely, I saw an article that there's talking about they're training up for having people going to Mars. So imagine like we just keep pushing up. We just push the bounds more and more every single year. I feel like in terms of exploring space, definitely not a bad way to look at it, I feel like, in my opinion.
Rocket Lab is currently building something to send to Mars.
Oh yeah.
RKLB. Yeah.
Huh. Interesting. Yeah, but I think I know ASTS has been a more hot commodity stock recently in terms of like people have been like wanting to rush into it and stuff like that. But the uranium ones, again, that uranium return is crazy, from $4 to like what, 12? You're looking at a 3x there.
Yeah, this went crazy,
from like
honestly.
April.
I was adding
That's
in on the
insane.
dips as we started breaking out, and it's crazy because in retrospect, like I had this analysis before this idea even started breaking out. I was like, all right, we're probably going to see some consolidation here, and we're probably going to see a possible double bottom back up. So
Yeah.
around that $4 zone, I started really buying in on the support that we had from this previous rejection area, right? And then from there, as we started gradually pushing up, right, kind of how I told you before, as we get into like, let's say we get to $10, right, I'll probably buy in, get back up to 11, buy in more, maybe 8, you know, gradually just adding into the position as we get those levels to break, and then we get the breakout, right? And eventually all that just turns into profit. So $4 and $6 were my just hammering. Once we saw $9, I was expecting a rejection. So by then I was just chilling, waiting to see what happens. I did not expect the breakout. And then, Lord and behold, we go to where we are today and look at this.
That's insane.
This is beautiful. I can't ask for anything else,
Right.
But yeah, definitely, guys, look into space, look into energy, look into freaking everything we mentioned today. I'm telling you, we've been dropping gems today. This is what it is.
I know that I was looking at the market like recently this whole week. Like, we had Oracle who missed earnings, but then they announced their partnership with AI and ChatGPT, and also that shot up like 30%, which is like absolutely unheard of. Like, it's ridiculous. But then also we had Nebis Group, NBIS, partner with Microsoft, and then that shot up like 40%. Now it's at like $100, and it's at $90 a share. Like, it's just an insane. Like, look at that huge gap up. Yeah, gap up in an insane amount because of the partnership with Microsoft. So, like, people were printing money this week. I was on Wall Street Bets, and just because that's what I do my videos about every week is what happens in Wall Street Bets every single week. And it was Open Door flooded with the comments. It was Open Door, Nebis Group, and Oracle were the big ones that hit the markets. So people were just printing money, and the Nebis one is interesting. They're partnering with Microsoft and stuff like that, and it's a huge gap up you got there. But it didn't last long. It's kind of getting pulled back a little bit more recently as a result. But just some crazy. We had some crazy moves in the market. It was absolutely insane. I couldn't believe it.
100%.
I don't really know much about Nebis Group. I don't know about you guys. I don't really know much about who they are really as much. Do you guys know anything about them or not?
I don't. I know
No
that
clue.
a lot of people were calling them out for a long time. I never got into them or looked into them.
Yeah, it's just, what do they even do? I'm seeing, I look it up here. They are infrastructure based in the Netherlands, developing a portfolio of artificial intelligence related technology assets. Okay, yep. I think I don't know about you guys, but I feel like everyone, here's where, and I don't know, was it Ryan? I think we talked about this yesterday. The big swing now is making sure you mention AI somewhere, shape, or form in any kind of earnings or whatever. And also it's treasuries. Talk about crypto. Like, we're getting crypto treasuries like coming out like every day now from companies that are up like 2,000%. It's insane. Everyone's starting to follow the strategy play of making a treasury and stuff like that and trying to be like, oh, like, we're going to use this. Like, I know that Fish and I talked before. It was BitOrigin, I think it was, that had they had their Dogecoin treasury, which was a while ago. You have Upexi, which has a Solana treasury, and this week people were announcing all these random treasuries, and they were up like 1,000, 2,000%. Like, it was unbelievable. So, Fish, anything about the crypto markets going on for you right now?
So man, the crypto markets are crazy. I was looking at Solana, right? And let me pull that up real quick while I'm doing this. I was looking at Solana, and Solana's crazy. Oh, if you went in 3 months ago, you made 57%. If you went in a year ago on Solana, you made 73%. 25% in a month. That's pretty damn good. You look at Ethereum in a month, it's gone up 1%. You look at Ethereum over 3 months, it's gone up 80%. Look at Ethereum over a year, 88%. So those coins, I pay attention to what I call the big three, Bitcoin, Ethereum, and Solana. Those are the coins that people were really making money. I expect Solana to really start going because we're entering altcoin season, and that seems to be what a lot of the altcoins are traded on.
Okay.
So that's my thought on crypto. What I do think about this whole treasury nonsense is that it is going to backfire. It is not going to work out the way I think. At the same time, I will fucking day trade the goddamn hell out of it. That's what I was. Those were the only trades that I took while I was on vacation. I made 1,500% in a day, 2,000% in a day, and 1,100% in a day. Like, There's no reason for this stuff, but it's happening. Right. So if you can spot it, make the money, and hang on for the ride, because it's going to be manipulated as well. Now that we've got all the big institutions into Bitcoin, it's being manipulated. It's going to be manipulated. So you just have to have conviction if you're in it.
Yeah, I mean, so you want to see some like insane stocks. There's two that like I saw the gains were just absolutely the craziest thing because they're treasury yields. First one is QMMM Holdings. Look at this chart. If you trying to pulls it up, dude. Like this moon chart, like look on like the hour one even. Dude. Like it is insanity. It went from like $2 a share to $300.
What the F, bro?
Like look at this.
What happened? When did this happen? What is going on?
So they announced this is what I'm talking about. They announced a treasury for I can't remember which one it was. They announced like a crypto treasury bet involving Bitcoin, Ethereum, and Solana.
That was a mix.
Yeah.
Oh, so yeah, we're like, let's just name all the Bitcoin. Let's name all the cryptos.
Name all the big crypto.
But dude, literally. imagine buying like $10 a share and it goes to 300. Like that return is flipping insane.
They've been around. They've been low for a while too. Like all 2024, all 2025, and then boom, dropped the fucking hammer, man.
Yeah. So that was one that did very, very well with the treasury. This is why I brought up the treasury idea. The other one is Orbs, ORBS, which was Octo before, which I bought a share and I lost money on like $20. But Orbs also pumped like 3,000, 5,000% at one point in time because of a treasury announcement with WorldCoin. Like it was just insanity. Oh, that's because they renamed they changed their ticker symbol. That's why.
Yeah, it went from Octo to Orbs.
Went from Octo to Orbs. So
I can see the spike though, all the way to $80. Damn.
Yeah, so it went from like $2 up to like $80 a share. It was absolutely insanity, and it was like 4,000%, 5,000%, whatever it was. But they announced a treasury also, so that's why I brought it up. I was like, dude, like you just got to mention the word treasury in something, and you skyrocket for whatever reason. I don't know what it is, but that's literally what happened. And with those two, I was like, dude, these returns are absolutely insane. I know there's another one that I think also did pretty okay. Not like as insane as that one, but UPEXI, ticker symbol UPXI, is a Solana treasury as well. And they've done really, really well. They're up 19% at the time of market close on Friday. UPXI is
Are they even giving details on these treasuries, or they're just saying, fine, we're doing a treasury? And that's
the Orbs one, they talked about buying up 270 million of WorldCoin to make their treasury. They also put Dan Ives as the chair as well.
Okay, so they did a couple of things.
So they had a couple of things which caused it up. QMMM, I'm not really sure about, but like UPEXI is one that's been around for a while with a treasury of Solana, and they've been doing pretty much well as a result of it because they have a Solana treasury, so they've been doing pretty well. Again, in terms of like the last, like they were down at $5, now they're up at like $7-ish or 6 something. So you go from a low of 520 up to that. You're looking at about 30% upside in about a couple days, or so. So it's just so interesting that like everybody's talking about now treasuries. I think it's the new thing, trying to follow strategy. So I was curious to know if Fish knew really, what was going on or not. But very, very interesting stuff is going on there.
Dude, I don't. Unfortunately, all of this stuff is I've been texting with a couple of people here. All of this stuff is very bubbly, in my opinion. And that's one of the things that I was just putting into the chat with Gio. All of these treasuries, it's just too damn bubbly, man. I don't like this stuff. I really don't like this stuff.
No, yeah. If you're just at the mention of something that's causing people to buy up, that's not a good sign.
Right. Like if you look at these treasuries that were coming out 6 months ago, right? Like KWM, K-Wave Media, right? They came out, announced the treasury, it's done nothing, right? But today you come out and you announce a treasury and you don't even have to have any coins yet. All you have to say is, "Oh, hey, we're going to start a treasury, and we're in the process of securing investment," and people will
Yeah,
buy
it's
it.
dangerous.
It's very dangerous. It's crazy.
Yeah, it's like
Yeah.
Fridge and I were talking about this yesterday with AI, but it's like the dot-com bubble, very similar. So,
Absolutely.
Yeah.
yeah.
Yeah, very, very, very interesting. So, if you ever see, these stocks going up, 1,000, 2,000%, that's probably because, they're announcing these treasuries and people are like, oh my God, it's the next big thing. And then, it's going to get, like if you bought in at QMMM at $300, it's now worth $70. So you just lost, 3/4 of your money just like that in a matter of a couple days.
Mm-hmm.
True.
So
When you
it's designed to get rug pulled for sure.
when you see these
Oh, yeah.
things shooting up that much, guys, do not FOMO. These are the worst things to FOMO on. You can lose a ton of money really quickly.
Yeah, or if you're looking at like for me, like so I bought a share of Octo before it was Orbs on the first day, and it went down like I lost $10 and I cashed it. I was like, okay, I was trying to hit the wave and hope that would still continue, and it didn't, and then I lost like $10-15, but that's the money I was like, you know what, whatever. Why not throw in $50, see what happens, kind of thing, So it's not like if you want to try to catch the wave and try to get the momentum, sure, but do like a very very small amount, 10, 20, $30. See what happens. Because even if you bought, if you bought like a share, if you bought one share of QMMM at like $15, it goes to 300. Like you're printing so much money. Like you're 20xing your money just by buying one share of it to ride the wave. So it's one of those things where ride the wave if you really want to try to, but like Fish said, you're gonna lose a lot of money if you put way too much into it. So don't go crazy with it, in my opinion, for sure.
Yeah.
Exactly. So this is a little off topic, slightly on topic. Something that I talked to you guys about before we started recording. So Hood, I placed a football contract on Hood
Yeah.
today, right? First time I'd ever done it, and so it was super simple. It goes back to what I've said in the past of Hood is just trying to take over every aspect that they possibly can, so that they're just one app that you need for everything. Making this bet was simpler and easier than using my Caesars app. It was seamless. The one thing that I do not like about it is my winnings show up as being only able to be traded for futures or other event contracts. It doesn't go back into your buying power. So
What?
No, that sucks.
What?
yeah, so I thought it would go into my buying power. It did not. So I just saw that, and so I just wanted to let everyone know.
So
Don't.
that's weird because that must be new because I don't think that's happened before.
Yeah, I'm looking at it right now, and so I mean, I just put I had put like $100 something on it, like super low. So I'd put a total of $129 into the contract. I won $109, and the buying power that I have is only $129.
Weird.
This
Maybe
is
maybe
strange.
it clears or
Maybe,
something.
maybe it clears later on. I
Like
don't
a
know because
settlement thing.
it says and then it says that it already went through.
Can you withdraw the cash?
Only the cash that I had already had in there. Only the cash. Only the principal.
Okay, and so the game. That's
Interesting. I wonder if you could reach out to Robinhood support
sketchy.
about that and see what they say.
And
Yeah, I
Mr.
probably
Galaxy
will.
saying it may take a day to settle. So you mean maybe see? I don't know. It said it can only be used for
Okay,
futures and
cool.
what?
Event contracts, which is what they call
Yeah, right.
football.
It's their betting
But
crap.
Yeah.
Can
yeah.
only be used for gambling. Well, futures aren't necessarily gambling, but
Interesting.
Gotcha.
But
Thank you,
I think Miss Galaxy's right. I think what he's talking about is that like sometimes when you do sometimes it takes like a day to run through all the numbers and to like verify what happened. Like I've had that happen once in a while on like my sports betting apps. It takes some time.
What did you
Okay.
bet on again, Fish? What did you bet on? It was what? Who
I bet
won?
I bet on the Philadelphia Eagles to beat the Kansas City Chiefs,
It
and
might.
they did. They won by 3 points.
It might take. Yeah, it might take time instead of like Caesars where they give it to you quick. Because I know like with my daily fantasy on DraftKings, like okay, I won, the game's over, but they haven't paid me yet. So then, and it takes like an hour or something, and then they'll pay me. So it could be that.
Yeah, that's what this said. That's what this said is that it can take up to an hour, and then
Okay.
it paid me back my initial principal, but it hasn't given it. It's only letting the winnings stay in the futures or event contracts area. I'm going to contact Robinhood support tomorrow if it doesn't switch over and ask them.
It doesn't hurt. I feel like to reach out to them, and and honestly, I will say like that's one of the customer supports they have has been really, really good. Like when I have a question, I get answers pretty quickly too, so they're not bad at it at all.
Yeah, it depends. I don't know. I noticed I used to have this like personalized number in Robinhood, and like I told you guys earlier, I moved my IRA, ACAT, now withdrew, and now I do not have a personalized number, and I just have a robot that I talk to. So I don't know.
Oh man.
Yeah. So if they don't like you, you get shitty support.
That's interesting for sure.
I don't really care.
Yeah,
yeah. Go ahead.
Yeah, no, I was gonna say, like, I mean, the futures. I mean, the sports betting thing is still really, really huge. The football season's coming around, so I'm sure it'll look really nice in their earnings report for how much money they make from it. I'm sure coming up with Robinhood.
Absolutely, especially with altcoin season and the credit cards. Didn't somebody say they're going into mortgages, or they already have mortgages?
Yeah, they have you get a discounted mortgage rate if you have Robinhood Gold. It's like instead of like 6 point something, you get like 5.8 or something like that.
But have they actually rolled it out yet?
That I don't know. I have to do some research to see who's actually done it or not. I believe I want to say they have though.
Okay. I mean, I know someone talked about the thing I don't like about they make all these announcements and then it gives them all this hype, and then I notice that they take a long time to implement some things. Like I remember it's like, oh, private banking. This was like last year, and they still haven't done anything with this private banking thing.
Right.
So I think that's what I just saw yesterday. It might be different, but I just noticed it yesterday. They're offering you can have like a private wealth manager for whatever percentage a year, and then I think there's like some sort of special cutoff after 100,000 and that particular.
That's
their managed
investor that you got.
Yeah. Oh, that's their managed.
Which
okay, that is.
So they announced that at the same time as private banking, and they went ahead and did the managed investing, but they still haven't done this private banking thing. I don't know. I just get, they announce all this stuff and it's like takes them a while to do it. And I get it takes time, but it just makes me skeptical sometimes.
I think it's one of those things where it's just like, with Robinhood, like they announced they want to get into private equity, right? They want to be able to use tokenomics to then get 1-to-1 backed, private equity shares of, like OpenAI or
right.
Whatever the other ones are, and so and they have to go through all the SEC stuff, make sure the lawyers get involved, and they know that they're not breaking any rules or the laws or anything like that. So the private banking one, I wonder if it's more along the lines of like they just have to make sure they dot their I's and cross their T's to make sure that no lawsuits can come after them. Same thing with the mortgage rates. Probably a similar idea where you can't just be like tomorrow, hey, you want a mortgage rate through us? Here you go. Like, they have to go through like all this,
right.
like, the tape, so to speak. So I think it definitely will take time. I think when they do roll this stuff out, though, it's gonna be very, very amazing. But yeah, I agree. It's the hype is there right now. They just need to deliver on the hype. And say they don't deliver on the mortgage rate, for example, it's going to bring the price. The stock price will reflect it if they don't bring it to what it's supposed to be. So now they have this huge momentum on their shoulders of having the mortgage rates, having the private banking, getting into private equity potentially. Like now they got to deliver. And it's all about delivery from their end now. So yeah, the hype is definitely there, but could it come back and backfire? 100%. Depends on what they do.
Right.
Now, don't forget, I'm pretty sure it's this coming week, right? That it's the Hood Summit week.
That was last week. You were on vacation. You were on vacation.
I was on vacation. That's why I'm like, don't forget. Fuck, I forgot. God damn it. Well, fuck me.
Yeah, this that was what they announced, a bunch of stuff for Fish. That's why I'm skeptical. They announced like 24-hour options contracts. You can short the market now.
What?
Yeah, all these things. You got to look at it.
Yeah.
Which it's crazy that they're going to let people. It's crazy they're going to let people short and they don't let you do naked calls. Like, why doesn't it make sense? But go ahead, Fish.
So I did see something about that. About Robinhood's going to allow people to short, and I thought it was someone that didn't know what they were talking about.
Oh no, it was in their announcement.
Oh my god!
Yeah, I don't.
Well, I mean, hey,
Yeah.
why not? If we're going to lower the pattern day trading rules to $2,000, let's go ahead and allow people to short with that 2,000.
Right.
Let's take the
Yeah.
money as quick as we can.
It's gonna be the wild, wild west over here in trading options now. It's gonna be just do whatever you want. Who cares? Like just just all bets are off. Like it's fine. Just do whatever.
It's going to make a
Yeah.
lot of people a lot of money, and it's going to cost a lot of people a ton of money.
Yep. Yeah, just second mortgage your house. No big deal. It's fine. Who cares?
It
Like
just
just do whatever you want.
Yeah, but only if I put it on 0 DTE, right? Come on, I know
Yeah,
I
of
can
course.
get. I know I
there
get
you go.
tomorrow. I know I can. Come on, pals.
I'm gonna hit it. I'm gonna hit it.
Right,
Just-
exactly. Like, what
Yeah,
the fuck?
I don't
That's where
understand. I don't get it. Go ahead. What?
that's where I feel like where we're sitting at right now is that like it's just feeding into like they
Oh.
know how greedy and how much people are addicted like to gambling. Gambling is like
gambling. That's what they're
all-time
playing into.
highs and stuff like that. And they're playing right into it. Instead of being like, hey buddy, here's an index fund. It's cool. Just buy it. Don't worry about it. Now it's like, dude, you want to make $13,000 on $5
Yeah, here you
here?
go.
Like, dude, like short, like, here you go. Cool. Like you have a chance doing it. Like awesome. Like they're like from a morale perspective and an ethics perspective, these guys are the worst. Like all the brokers are feeding into degenning gamblers, whatever. That's what they're feeding into. All of them are. It's not just Robinhood; it is other ones as well. But that's where I feel like every
Robinhood's the
brokerage
most
is going
guilty.
as a whole.
Robinhood's
Robinhood's most guilty, yeah.
I
Then there's gonna be Weed Bowl and stuff like that. But I just think in general, like they're just feeding into the degen gambler mentality that everybody has. They want to get rich so quick and not put the work in and not wait for it. They want to get rich tomorrow, have a Lambo on their doorstep in their garage with all the knowledge they got, like flipping Ty Lopez. Okay. They want to have all that stuff tomorrow, not next week, not next
Right.
year, not 5 years.
Not
They want
slow
it
and steady.
tomorrow.
Yeah.
And that's what everybody's feeding into right now.
Dude,
Yeah.
I say this all the time. Don't forget Robinhood. Like Ryan said, Robinhood's like the biggest offender. And
Yeah.
they literally designed their app to be as gamified as possible to
Right.
keep
Yep.
people on there longer. Like
Yep.
to take your money, folks. It's not because they think you're buying shares, but if you are buying shares, cool, because they'll make money there.
Yeah.
Right.
I mean,
They're like, look at this dude buying SPY. What is wrong with you? Like, look at this. It's all point and laugh at this loser buying index funds over
boring over here. Well, I was
here. Yeah,
just
what's wrong?
thinking
ahead.
how I was saying, like, why aren't they letting them why wouldn't they let people do naked calls, but then they'll let you short? Well, I think it's because when you short, you're gonna have to pay margin interest, so that benefits them. Naked calls, they don't benefit from.
Unless, yep. That's probably what it is.
I mean, that's probably also the reason why like they allowed futures is that if you buy and hold, you're gonna pay interest during that time too.
Right. So it's just from an ethics thing, it's just like like people always say, the rich get richer. People are going to be greedier and greedier. It's how it's always going to be.
But
Unfortunately,
I think we're definitely it's the people want to get I think the younger generation is all about and our generation too is all about instant gratification. I say our generation, although China's not in our generation, but like they want that instant gratification. I mean, you got like even
Right.
you look at like the fitness industry, like people go to steroids very quickly because I don't want to just slow and steady build muscle. No, I need to be huge tomorrow,
Or they go to Wegovy, I want to lose my weight
There you
like
go.
in like a
Exactly.
week and a half instead of losing weight like, instead of being down 20 pounds in 3 months, I'll be down 20 pounds like yesterday,
Right.
So going to the Wegovy's and all that kind of stuff. Like, there's not a lot of hard work. It's like you said, it's the instant gratification. You want to get it done, you want to look awesome, and that's all you want. Rocky says, give me the cake and the Ozempic.
Yeah,
Exactly.
exactly. I don't want to determine what a calorie deficit is and slowly lose weight. Just let me do whatever and take Ozempic.
Yeah, side effects. Yeah, who cares? Side effects. Whatever.
Yeah.
It's fine.
Well, I saw
side effects are looking awesome. That's
there
the
was
side
an
effect.
ad with either Serena or Venus Williams, and they were saying it was her promoting one of the weight loss ones, saying like, "Oh, people think it's like cheating, but it's not."
Yeah,
I don't know which
and
one it
people
was.
love that commercial. Whichever one's not playing right now, it was the other sister because they were trading off of the other sister playing doubles with a different person because the two sisters had always been double partners.
Oh,
Huh. Yeah, it's crazy times we're in, But, we've been on here almost 2 hours, guys. Isn't that wild here? So I think we should probably wrap it up here before it gets too late in the evening time. I know we all got some lives to get
Yes.
ready for tomorrow here. So, again, as we're getting to the end of this, anybody tuning on Discord, as always, thank you guys all so much for tuning in. This has been a
Yes.
really, really good conversation, honestly. It's been really, really awesome and insightful for everybody, I think, for sure. And it was a pleasure talking with everybody, as we always know here. So, parting words, as we always do before we leave here. Starting off with you, Ryan, because I'm just looking at my screen. Ryan, any parting words for the viewers on YouTube or in the Discord?
Yeah, I mean, just don't worry about where you think things are gonna go. Just trade what's in front of you, and keep it small. And I got this poll up on After Hour, and it's not going well. So there's that. No one's getting this answer right, and I'm kind of surprised. Actually, I'm not that surprised, but that's all I got to say.
Love that. So if you're not following Ryan on After Hours, go follow Ryan on After Hours and on YouTube as per usual.
Yes.
Trying to make it. Any
Thank you.
parting words, anything before we start with the market tomorrow for the week here? Any closing remarks on your end?
Oh, well, just everybody should be careful. FOMC around the corner. Expect the unexpected. Be prepared for anything, honestly, and just don't be a DJ.
Don't be a DJ like Robin Hood wants you to be. Couldn't say it better myself.
Exactly,
Want you to
right?
be.
Literally, don't fall to those temptations.
Right.
Smart.
And my boy Fish, it's a pleasure having you always on here. Hopefully you enjoyed your vacation. Any parting words for the viewers?
Yeah. When you go away on vacation, make sure that you take fucking medicine with you. I'm sick as fuck. Beyond that, beyond that, man, when we get them, buy the dips and shit that you're interested in. Sell the rips. Take your profit. Don't sit there and think that it's going up forever, because it is not. It will come back down. You'll be able to get another entry at some point. Be smart about it. Do your due diligence, and remember, always, anything that you heard tonight on this is not financial advice.
Not true. Yes.
Mm-hmm.
Yes, that is 100% true. I always put that on my videos usually. Hey, I am not a financial advisor. So no one can sue any of us because we are not financial advisors. If you made it this far in the video, thank you for watching 2 hours worth, because none of us are financial advisors. Please do your own research as per usual before you do any sort of investing. But yeah, I couldn't agree. You guys have some amazing words as always. It has been a pleasure and an honor to do another week of the Roundtable podcast for everybody here. We're on episode 12, which is wild. So we're going to keep the grind going here as always. Unfortunately, we know Royalty couldn't make it here, but we would love to have Royalty back in hopefully next week. Let's get an idea as to what his mindset is on the markets, because he always has some very insightful stuff as per usual. So I couldn't say anything else. You guys have been awesome as per usual. Thank you all for joining us on this fine Sunday evening in my time. And again, we will see you guys next week. Make sure you guys tune into the Kingdom. It's your boy Fridge Financials, Ryan, trying to make it, and New Fish Bay Pond with the Kingdom. And we will see you guys next week.